Okay, let's just jump right into this explainer because we are going to completely transform how you feel about tax season. It's usually the time of year when most of us, well, start to panic a little bit. But I promise you, over the next few minutes, we're going to lift that weight right off your shoulders. You know, this quote perfectly captures that knot in your stomach when the broker paperwork suddenly arrives. You might completely understand things like ETFs, risk, and rebalancing. But then spring rolls around and your broker cheerfully hands you something called a 1099 DIV, like it's a birthday card. And your first instinct, it's probably to run for the hills, right? Take a beginner investor, let's call her Maya. When she first saw a stack of PDFs with these cryptic names, her immediate reaction was exactly this thought. She panicked. She assumed she'd made some terrible mistake, just because taxes always feel like a penalty. The numbers looked so incredibly official, and she felt like she'd accidentally joined this secret society where the membership fee is just endless paperwork. But the real truth? Maya was just meeting the totally normal, totally boring, administrative side of investing. So, to eliminate that anxiety, we're going to follow this clear roadmap today. 1, the tax anxiety myth. 2, forms are just receipts. 3, a simple tax glossary. 4, short versus long-term gains. 5, finding your tax portal. And 6, a stress-free checklist. Section 1, the tax anxiety myth. Let's start by knocking down the absolute biggest psychological barrier holding you back, which is just the fear of the paperwork itself. Look, receiving a tax document from your broker is absolutely not a punishment. They aren't sending it because you're in trouble. Brokers in the US, and honestly in many other places, are just legally required to report certain types of income. It's a routine requirement that's actually designed to make filing easier for you, because most of the math you need is already done. Beginners don't fail at taxes because they're irresponsible. They fail because they just don't know what to expect. And when you don't understand the documents, your brain naturally fills in the gaps with pure dread. Which brings us to Section 2. Forms are just receipts. Now that we know we aren't in trouble, let's completely reframe how we look at these documents. The absolute best way to think about tax forms is to treat them just like annual receipts, summarizing exactly what happened in your account over the year. Honestly, this simple breakdown eliminates like 80% of beginner confusion right out of the gate. It shows you exactly which normal investing activity triggers which receipt. If a dividend hits your account, boom, you get a 1099 DIV form. Earn some interest, you get an INT. Sold an ETF, that's a B form. And if your broker is super organized, they'll usually send what's called a consolidated form. It just acts like a single virtual binder holding everything together. All right, Section 3, simple tax glossary. To completely get rid of that intimidation factor, we have to translate IRS jargon into plain, everyday English. Words stop being scary once you strip away the mystery. So let's look at 2 terms that trip beginners up the most. First up, dividends. You'd be surprised how many beginners get caught off guard by this one. But receiving a portion of a company's profits as a dividend is a totally normal part of owning broad ETFs. A lot of folks say, wait, I didn't sell anything. Why am I being taxed? Well, remember, dividends are cash payouts. So in a standard brokerage account, they are treated as income, even if your app automatically took that cash and bought more shares with it. Now, on the flip side, cost basis is literally just a fancy way of saying the original amount of money that came out of your wallet on the day you bought the asset. Knowing what you originally paid is crucial because you only pay taxes on your profit. And your profit is just the difference between what you eventually sell it for and your original cost basis. Super simple. Moving right along to Section 4, short versus long-term gains. Let's see how all this connects into a really cool case study on how your investing timeline directly impacts your stress levels, and more importantly, your tax bill. In the US, this one single number is pretty much the magic dividing line between a really stressful tax season and a deeply relaxing one. And hey, a lot of countries have very similar rules that basically reward your patience. Let's look at why. This clears up exactly why using a simple buy and hold strategy naturally lowers your tax burden and makes your reporting a breeze. Think about it. If you're buying and selling every few days, your broker is going to generate a form with dozens, maybe hundreds of lines of short-term gains, which are taxed at a much higher rate. But if you just buy broad ETFs and sit on them for years, your form is tiny and your potential taxes are way lower. So long-term investing isn't just calmer for your mind, it's literally cheaper. Okay, Section 5, finding your tax portal. Now that we've removed the mystery around the forms themselves, let's talk about the actual, literal steps you need to take in your brokerage account to find them.
Confidence is built through familiarity, right? Taking these tiny micro actions long before tax season actually arrives is a total game changer for your stress levels. Do this on a quiet weekend. Open the app, log into your broker, dig around to find the Documents or Tax Documents tab, and literally write down exactly where it's located. You'll know exactly where to look before the pressure is even on. Then, when January or February rolls around, executing this simple, immediate downloading routine keeps you completely in the driver's seat. I highly, highly recommend creating one dedicated digital folder on your computer. Call it tax year 2023 or whatever year it happens to be, and just drop all those generated PDFs right in there. This one step completely saves you from frantically searching through old emails the night before your taxes are due. And I'm about that relaxation script in step 3. It might sound a little silly, but reading this out loud actually works. It helps neutralize that immediate anxiety that automatically pops up when we handle financial documents. It replaces panic with logic. Just remind yourself, this is not a warning, it is just a receipt, and you follow your checklist. Taxes are just a normal part of investing, not a sign that you failed at something. Finally, Section 6, your stress-free tax checklist. To wrap this all up, we've put together a really practical checklist you can use to structure your whole plan. Feel free to pause this explainer right now, grab a pen, or just take a screenshot so you have this for peace of mind later. By relying on a simple step-by-step procedure like downloading all your forms, waiting to see if they send a corrected forms notice, and saving your PDF securely, you ensure nothing slips through the cracks. And honestly, the best part? You don't have to be your own tax hero. You save the PDFs to your custom digital folder, update your own investing log, and then you literally just drop them into your tax software or email them to your CPA. Those programs are literally built to read these exact forms, so let them do the heavy lifting. Remember, keeping things simple is your best defense. If you stick to a simple ETF portfolio with a very low trading frequency, you're setting yourself up for success. Those are the green flags of investing. If you just buy and hold and you rarely sell, your tax situation stays incredibly simple, your forms stay super minimal, and your stress basically drops to zero. So if you just view your forms as an annual, routine summary of your successful investing journey, think about how much lighter you're going to feel this coming April. Taxes really only feel terrifying when they're a mystery. But now, you know what the forms are, you know the vocabulary, you have a solid checklist, and you've got your organized digital folder ready to go. So I'll leave you with this. If tax season is no longer a mystery to fear, how much more confidently will you build your wealth this year? Thanks for joining us for this explainer. Stay calm and invest smart.